All right, Apple's plans to introduce faster and cheaper iPhones may be music to the ears of some of Apple's suppliers. For a look at how Apple's plans may benefit or harm other companies in the technology industry, we are joined by Srini Paijuri. He's an analyst at Calyon Securities at CLSA. Srini, thanks for joining us. Let me talk first of all, I got this idea from a viewer. He wanted to know which parts makers are going to benefit from maybe a boost in sales of Apple's products, or what goes into this. And I know I want to focus with you on the chip suppliers, but what kind of universe are we talking about here? How many companies go into making, for example, an iPhone?
Yeah, Matt, there are several companies. I mean, if you look at the chip companies, they include Infineon, Samsung, Broadcom, Marvell. There are a number of other component suppliers. I would say a majority of them are probably in Taiwan. For example, there's a company called Wintech that does the touchscreen, and there's a company called Largan that does the camera module. And also there are several assemblers and other component suppliers. But as far as the U.S. is concerned, most of the chip suppliers are here.
Now, it's interesting because we're going to talk about, if these companies, these suppliers can go along for the ride as iPhone sales pick up, but you are, in general, bearish on the industry as a whole. Why is that?
Yes, we're actually telling investors to take some money off the table after the rally today. One of the reasons why we are bearish is that, we think what we have seen so far in the year, the SOX index is probably up north of 30%, versus S&P being flattish for the year. And what we're seeing in the industry is what we believe is the inventory restocking. And we think that's mostly over now. And we're somewhat concerned about the demand recovery in the second half. So the expectations appear fairly high for the sector, so we'll be taking money off the table.
Now, what about Apple itself? I mean, obviously, Apple's had a great run year to date, up 65, 70%. Actually, here you can see 67.2%. Do you expect Apple to do better if it does release new products that excite consumers, if it does cut prices to boost sales?
Well, I do not personally we do not cover Apple at Calyon, but what I would say is that the smartphone market itself is growing, even though the demand is weak in the cell phone market. For example, our analysts are forecasting the handset market to decline in double digits this year, but the smartphone market, phones like the Apple iPhone and the Palm Pre are expected to grow at about 15%. So that market is still relatively doing well. But again, we don't have an investment opinion on Apple itself.
All right. So, but what does this mean for the chip suppliers? I mean, you mentioned, I think Infineon, Samsung, Broadcom, Marvell, they all supply chips to help build Apple's iPhone. Do you think they've had their runs already for the year?
Some of them did, and some of them still have upside. Of all the four that you mentioned, we like Marvell here. The valuation is still attractive, despite the fact that stock's been running up nicely, including today's run. And also, if you look at the biggest surprise yesterday, the fact that Apple is not discontinuing the existing 3 phone, that actually helps Marvell. And the fact that they're lowering the price also probably helps Marvell here, because they supply into the 3G iPhone, but they do not supply into the upcoming 3GS. As a result, the stock did take some hit in the last couple of quarters, and now that that they're still in the iPhone, that stock should benefit in our view.
Why is it that that you like Marvell better than the others? I mean, it's just that they haven't had the same run as far as their stock has that Infineon has seen, that Samsung and Broadcom have seen? And also, how important is the smartphone market to these guys? I mean, does it really move the needle as far as their business, their revenues are concerned?
Yes, as far as the iPhone is concerned, I would say the exposure for most of these guys is less than 5%. But in a given quarter, the ramps at Apple or BlackBerry or some other smartphone makers could actually move the needle for these guys. But going back to your question on why we like Marvell, first of all, the valuation is still attractive at about 16 times on an EV to free cash flow basis. And also, we like the fact that the company is cutting cost. And also, we like the fact that the company is gaining share in some of the other markets. For example, they are expected to gain share in the hard disk drive market starting in 2010. And again, as I said, one of the few companies that are actually cutting costs and also positioning themselves better for the next upturn.
Hey, Srini, we really appreciate you joining us today. Srini Paijuri there of Calyon Securities, CLSA, talking about the suppliers, the chip suppliers, specifically for Apple's iPhone.